Hello, everyone, and welcome to today's Q&A for our December daily Kickstart. My name is Rachel Neighbors. I'm here from Neighbors Group and Solo401k.com. Today is Sunday, December 20th. Yes, we are doing these Q&A calls every single day. As an entrepreneur, a small business owner, you oftentimes, I'm sure, have to work on the weekends. And this time of the year especially, we want to make sure that our team is here to support you so that you have your questions answered, so you feel comfortable and powerful moving forward in setting up and using your solo 401k with Neighbors Group. As a way to help us deal with the volume of new account holders that we have, usually in the last few weeks of the year, we do these daily Q&A calls. And the point of doing these sessions is to help you to get your questions answered as soon as possible. So yes, it's a Sunday afternoon, and yes, we are here for you to make sure that you have the support that you need. We will be doing these Q&As every single day until the end of the year so that you can have what you need. If you're brand new to us, so that you have what you need to get your account established by the December 31st deadline. And if you are a current client, sometimes this can be a really busy time of year for us because, well, not sometimes, every year, it's a really busy time of year for us because so many new account holders are wanting to get their plans established by the 31st. But if you've been with Neighbors Group for a day, a week, a month, a year, 10 years, some of you have been with us close to 15 years, we still want to make sure that your questions are answered in a timely fashion. So the way to do that for us is to have these Q&A sessions every single day until the end of the year. We've got a couple of pre-submitted questions here, so I want to get to those first. And then if you have any live questions that you want me to cover, you can type them into the chat on this side of the page, or right around here, you should see a link that says Ask a Question. If you click on that link, it will open up a little pop-up and you can type in any questions that you have so that we can get to them. And if today is a quick Q&A, that's okay too. As I mentioned, we'll be doing these every single day until the end of the year. So let's jump into our couple pre-submitted questions. Brian asks, I have been reviewing the signature documents and the trust EIN documents refer to the checked box indicating you are a nonprofit organization, which I am not. I am very much a for-profit entity. Please explain if this check was intentional and why, if it was. Also, kindly let me know what form series I'm going to be expected to file. This process is complicated, and I greatly appreciate your help guiding the way through. Excellent question, Brian. And, I'll tell you, we get this question about the nonprofit status that it says on your EIN letter at least once a week. So we cover this. We're happy to cover this for you extensively so that you understand how the process works. Your 401k plan is not a nonprofit. Your business is most likely not a nonprofit. As you mentioned, you are a for-profit entity. That's fine. That's absolutely normal. When we obtain your tax ID number from the IRS, we have to go through a series through their online application where we have to check what type of an application it's for. And the IRS is closed today. Believe it or not, they even shut down their website on the weekends. So I do have some screenshots of the application process so you can see exactly what that looks like. And you'll see that your plan is not a nonprofit. This is simply the form language that the IRS uses as part of their way of spitting out EIN letters online. So let me make sure I can get to all of these. I hope that this will work. Let's see. So hopefully by now you can see the first screenshot. This is one of the first pages of when we are applying for tax ID numbers online. You'll see there's a checkbox here where we select View Additional Types, including tax exempt and governmental organizations. Now, I don't know if it's going to let me just toggle to the next screenshot. Let's see if it will. No. Okay, so I'm going to have to stop sharing my screen and resharing. So that's step number 1, is we have to view additional types. And then step number 2, hopefully this is the right one. Yes. Then you'll see here, we click on the selection for employer plan, 401k, money purchase plan. That's our next step. And then the final step in the process before we can proceed to enter your information is we have to verify with the IRS that this is a tax ID number for an employer 401k plan. And then the next stages in the application are we input your information and we are able to get a tax ID number from the IRS. The IRS only has a couple of form letters that they use for their employer identification numbers. That's the EIN, otherwise known as a tax ID or a tax identification number. The IRS only has a couple of form letters. Whenever you check anything on that first page, let me go back to it where it says view additional types. I think you'll be able to see it here. Whenever we check anything on this view additional types selection, it's going to use that single form letter and that language from the IRS saying it's a nonprofit, even though it is not a nonprofit. We keep copies of all of the applications. If, Brian, you need a copy of yours, we're happy to provide that for you. We always code these as employer 401k plans. This is just the form language on the IRS letter. There is nothing that you need to do. You have no additional filings that are needed, no additional forms that are required for the IRS. They were saying in that form letter language, if you are a nonprofit, then you have to file certain forms. Your 401k plan is not a nonprofit. Your 401k plan is a tax-deferred retirement account. So tax-deferred retirement accounts such as a 401k, in 99.99999% of cases, do not have a tax return. So you do not need to file a tax return for your 401k. You do not need to file anything saying you're a nonprofit because you aren't. I hope that that's been helpful. Like I said, we get that question pretty much once a week with people reading through their documents, as you should, and being a little bit confused by that particular IRS language. It's just what they say on their form letter. When we get your tax ID number, we code it into the IRS system as an employer 401k plan. So great question there, Brian. Really appreciate you bringing that up. I'm sure that we'll be able to use answering your question for many other clients to come. So this is great. Okay, so next question comes from Rob. Rob says, I do not have a solo 401k. I'm a W-2 employee, but I do have a 401k from another employer that I would potentially convert into a solo 401k. I also hold an IRA with Bank of America, but I was going to fund with the above 401k until I saw what you all were offering and I wanted to figure it out. Great question, Rob. So what I want to do here is quickly touch on eligibility and what that looks like. So if you go to our website at solo401k.com, you'll see that we have an eligibility questionnaire that's available for you. I'm actually going to put this link into the chat here. So if any of you today are new to us, you're considering a solo 401k and you want to verify that you are eligible, you can click on that link and test your eligibility. What this will do is bring up a short questionnaire for you to answer some questions. And based on the answers to your question, we will let you know if you qualify for a solo 401k. So for you, Rob, I would say that this is the best next step to take, is to test your eligibility. In short, to qualify for a solo 401k, you need two things. One is the presence of self-employment business activity. And two is the absence of full-time W-2 employees other than the owners in that business. So let's explore a little bit what this means. You might have self-employment income via 1099 income. We have hairdressers, real estate agents, CPAs, attorneys, consultants, developers, translation specialists, transcriptionists, virtual assistants, all of these types of Uber drivers, Lyft drivers, DoorDash and Uber Eats, all of these can gain 1099 miscellaneous income. That counts as self-employment income. So Rob, if you have any earnings like that, then you qualify for a solo 401k plan. And of course, for every business owner where you have an LLC, an S Corp, a C Corp, a partnership, a sole proprietorship, and you are earning self-employment income, as long as you don't have full-time W-2 employees in your business, other than you and your spouse, then you qualify for the solo 401k as well. And we hold a strong belief that if you are a self-employed individual, you run your own company, and you qualify for the solo 401k, it is one of the most powerful, if not the most powerful tool that you can really arm yourself with for your retirement future. The amount of money that you're able to tax shelter in a solo 401k and the investment flexibility that you have in choosing your own investments can really change your life. We've heard that time and time again, that the solo 401k was a vehicle that really brought people their financial freedom. So it's awesome. It's something that we really believe in. And for you, Rob, I think the easiest thing to do is to click on this link, go to this page, and test your eligibility and see if you qualify for the solo 401k. And if so, of course, we would love to have you and make sure that you are well on the path to your own financial freedom. So thank you so much for that, Rob. Okay, next question here comes from Robert. Robert says, "Hi, Rachel. Thanks so much for your assistance. We spoke on the phone yesterday." Robert, yes, hello. "Since I'm seeking to make transactions before the end of the year, do I need a short plan year? My plan year says it's from January 1st to December 31st. That is actually correct, Rob. All 401k plans, you want these to be from January 1st to December 31st. The reason for that is when you have the entire year, you're able to calculate and bring in your contributions from your earnings for the entire year. So, Rob, the plan year does not have anything to do with making transactions. You can make transactions anytime. I know that you already have your solo 401k with us when we spoke on the phone yesterday. I know right now you're getting your bank account set up so you can start making contributions. That's your next step. Get those bank accounts open, deposit your contributions so you can start making your investments. What the plan year refers to is how do we calculate the income from your business so that you can have those be eligible for contributions. And you want as much time as possible. You want to have the entire year available to you so that even if you set up your solo 401k right now with us at the end of the year, you can count the entire year's income as eligible for your contribution calculations. So just to recap here, Robert, the plan year does not have anything to do with your transactions. You want a longer plan year so you can pull in more money for contributions. And your plan is already set up, Robert. So your next step is to open your bank accounts and make your contributions so you can start investing. Really good question. Thanks for bringing that up. Okay, next question comes from, more from Robert. Great. "In the adoption agreement under Section 2A, can the plan permit employer matching?" So this is going to be kind of nerd stuff, but with the solo 401k, it is a profit sharing plan. There is no employer matching. The profit sharing actually tends to be more favorable and let you put more money in than a standard matching plan. That's because if you already are filling up your employee contributions, let's say at another job, you have your full profit sharing contributions in the solo 401k available to you. If we did a matching plan and you filled up your contributions at another workplace, the matching would not be as advantageous. Instead of a matching contribution, the solo 401k allows you to make profit sharing contributions. Profit sharing contributions are up to 25% of your net compensation. It's a more favorable contribution calculation and actually lets you put more money in. Next question here from Robert. How does converting an LLC, single member Schedule C filer, to an S Corp next year affect any of this? Great question, Robert. And you must be really thinking things through, because this is the profit sharing contribution is exactly what is affected. For a single member LLC, also known as a sole proprietor, remember when we were talking about qualification, when we were discussing the previous question, and the qualification, we said that 1099 income that shows up on your Schedule C can qualify you for a solo 401k. If you have 1099 income, you are showing income on your Schedule C, and you're a single member LLC. Your profit sharing contributions are 20%. If you are a corporation, your profit sharing contributions are 25%. So Robert, for you in particular, how the election, the taxation election, will change things for you next year is you'll actually be able to put in more profit sharing contributions. Let me go ahead and share my screen so I can walk you through the contribution calculator. I think this will be really helpful to have a visual here. So you should be able to see my screen. I'm going to go to solo401k.com/calculator. And you'll see that in our dropdown, we have a couple of options of business types. So let's just take an example for you, Robert. Let's say right now you have the sole proprietorship. That's a single member LLC, and you're showing your income on your Schedule C of your tax return. And let's imagine you're going to show total compensation of $100,000 for 2020, and you're under age 50. As you can see, that would allow you to contribute $38,087 to your solo 401k. By changing to single owner corporation, hopefully this number should go up a little bit. Yeah, see how that went up? So unincorporated sole proprietorship, $38,087. Just by changing you to a corp, now you can put in $44,500. The only thing that changed was the business structure. And that's because, according to IRS rules, sole proprietorship, single member LLC, taxed as a sole proprietorship, are going to have 20% profit sharing contributions. When you're a corporation, S Corp, C Corp, etc., multi-member LLC is also in this camp, then you can put in up to 25% of your profit sharing. Great question, Robert. Thank you so much. So next question comes from Yunhee. Hi, Yunhee. Great to hear from you. Yunhee says, I really want to do this, and now I finally have the chance. Oh, that's so great. We're so glad, looking forward to working with you on this, Yunhee. But I don't want to get blindsided. I need to know what to do about tax filings after setting up a solo 401k. Great question, Yunhee. So as we covered just a little bit earlier in today's call, your 401k is a tax-deferred retirement plan. There is no tax return for a 401k. So there should not be any tax filings as far as a tax return that you will be required to do for your solo 401k. Now, you might need other filings if you are taking distributions or if you are doing in-plan Roth conversions. And we have trainings and guides and articles in our knowledge base that you're welcome to follow. But I'll tell you, there's no substitute for a great CPA. And Yunhee, I know that you've worked with us for a long time in other capacities. I think it's really important because I know you have a curious mind and you want to make sure you're really understanding things before you move forward. So I think really, Yunhee, the best thing for you is to make sure you have an engaged CPA who can be by your side to make sure they're tackling those questions with you. We are your IRS plan document provider. We are here to help with the logistics any way that we can, but we are not a substitute for your CPA. We do not file taxes for you. So if you have questions about the particulars of your tax filings that go above and beyond what's in our knowledge base, our Q&As, our online trainings for our clients above the network, then that's definitely something you're going to need your accountant to support you with. But the tax filings after setting up a solo 401k are quite straightforward. There is no tax return. So the only time you would need to do tax filings and pay taxes to the IRS is if you're removing money from your 401k, doing a distribution, or if you're doing something like an in-plan Roth conversion. And we do have trainings and guides that will take you through that. And we would strongly recommend that you have your accountant back you up there as well. Thank you so much, Yunhee. Great question. Okay. So, oh, Yunhee, you're so great. Yunhee, you say, okay, also on your website, it asks me for a credit card number before I can see anything at all. I'm thinking that we should walk through the setup together in order to name it, the banking choice, etc. Yeah, great question, Yunhee. So what I want to do is take you back to our website. If you go here to solo401k.com, then right here, this big button right here that says sign up, if you click on this button, that's going to take you right to our Solo 401k application. And you'll be able to see here exactly what you need to input on the application so that we can prepare your documents. Now, this is a pretty straightforward here. You are the account holder, so you'll put your information here. In the middle section, you'll say whether or not your spouse is participating in the plan with you. If your spouse works in your business with you and receives compensation, they are eligible to participate in the company retirement plan. In the next section, you'll input information about your business. This is a dynamic application. So if you click on LLC, for example, a couple of new fields pop up because we want to know more information about that structure. If you're a sole proprietorship, for example, the questions might change. So this is a dynamic application. And Yunhee, down here is exactly what you were just asking about, naming the trust. So you can read through our best practices here and then select the name that you would like for your trust. After you complete the application, then it will take you to a payment page so that you can proceed with payment. And now let me bring you to another page here that I think will be helpful. If we go to back to our main website at solo401k.com. Okay, so here I'm going to learn, setup, and the setup process. Yunhee, you bring up a really good question about like, hey, what do I do? What are the steps here? This page is designed to walk you through the entire setup process. So as you'll see, step 1 is to complete your application online. You can always get to the application from our website at that big sign up button right here, that big blue sign up button. Once you complete the application, our team will get your new tax ID number and prepare your documents in just a couple of hours. And now the IRS is closed on the weekends, and sometimes we need 3 or 4 hours instead of 1 or 2, especially in the last 10 days of the year, which is our busy season. But we can have your documents ready pretty much immediately. That's all that you need to get qualified for 2020. Just step 1 and 2. Complete your application, get the documents from us, and then you are qualified for 2020. Then steps 3 through 6, you can proceed at your own pace. So funding the plan via rollovers or contributions. Of course, we've gone over in previous Q&A sessions exactly how we can help you with those rollovers, contributions. Make sure you check out the Q&A from yesterday. We did some extensive discussion on contributions and rollovers. We also will help you open bank accounts or brokerage accounts in the name of the 401k trust. This way, you can deposit those rollover or contribution funds into your 401k trust bank or brokerage account. And then you've got the money in your control and you can start investing. Steps 1 and 2 need to be done by December 31st. Step 3 and 4, you have until tax day, even for 2020 plans. You're allowed to make your contributions up until tax day 2021 for 2020 contributions. So for those of you who are joining us today and you're wondering if you can still get your plan set up on time, yes, you absolutely can. You just need to complete step 1, which is to complete that application online. And if you go to this page, I'll make sure I link it into our chat here as well. There you go. then you can review the entire setup process. And we have some really helpful links that will be here for you too. And we'll also make sure that you have a link to the application, which is right here on that sign up page. I'll post that into the chat as well, so it's easy for you to access. Great question, Yunhee. Okay, so it looks like we've got one more question here for Yunhee, from Yunhee. If your deductions are less than the standard deduction, what is the allowed contribution percentage? Great question, Yunhee. So again, you'll want to work with your tax advisor or your accountant to make sure you are properly calculating your contributions. Our contribution calculator is a great place to start, and your CPA or your accountant, your tax advisor, is the person that you're going to want to sign off on those numbers to make sure you're not over contributing. But you also want to make sure you're contributing enough, because these contributions can be such a powerful tax tool. So deductions are going to happen after you make your contribution, Yunhee. What you're going to see on your Schedule C, if you are a sole proprietor, and we'll see if we can open one up here from the IRS. Give me just one moment here. Let me share my screen one more time. Okay, so for those of you who are sole proprietors, and I think, Yunhee, that you are, this is your Schedule C on your tax return. This is your profit and loss from a business. So Robert, this will also apply to you since you have a single member LLC. That income flows through onto your Schedule C. The magic number that we're looking for is going to be here on line 31. This is your net profit or loss. This is the number that you will use to calculate your contributions. So Yunhee, as far as deductions, you need to make sure you're working with your accountant or your tax advisor. The number that you will use to calculate your eligible contributions for the solo 401k is based on your business earnings, the net compensation shown in line 31. Great question, Yunhee. Okay, well, we'll take one more chance here for live questions. I really appreciate you guys coming and hanging out, even on a Sunday afternoon. Oh, you're so welcome, Yunhee and Robert and Brian and everybody that had questions. It's great to be able to be here and to support you guys. Remember, we are doing these daily sessions every single day until the end of the year. If you have questions about setting up your new plan with us, or if you're an existing customer and you want to make sure you've got these last minute burning questions that need to be handled, find us here every day for the rest of the year at 3 p.m. Eastern Time. And we'll be here to make sure you have the support that you need. Go have an awesome rest of your Sunday, everyone, and we'll see you tomorrow at 3 p.m.